And here they are. The October unemployment report is just out seconds ago. The numbers now from CNBC's Brian Sullivan live at CNBC Global Headquarters. Brian, what are they?
They are better than expected at 179,000 for the month. That is 46,000 more than the estimate, or at least some of the estimates. The unemployment rate, it's 7.9%, so still under that 8% mark. I think the two better numbers in here are the fact that there were some prior revisions that were revised higher as well, Mika. And you've also got some better data on hourly working. So basically, there's the official. Kind of waiting for the government report to actually update on its own website rather than go with the headlines. 171,000, 7.9%, and 184,000 private sector payrolls were created. So all in all, guys, a better than expected jobs report, and we are seeing stock futures rise on that number.
Literally on the number. Steve Ratner, your take?
I think Brian said it. I think this is certainly a positive for the president in terms of this continuing gradual improvement in jobs. I think the economists expected, as I said earlier, the unemployment rate might well go up a tick because it had come down so much last month, and as Brian pointed out, still under 8%. I think generally the revisions are good. The private sector job creation was even stronger, the loss of government jobs. The only thing I see in this release that is troubling a little bit in the longer term is that incomes are still really not growing. There was no growth in income last month for the average American, and that does hinder the recovery.
All right, Lee, stand by. Brian Sullivan, you have a little bit more here. Go ahead.
Yeah, I'm digging through here. Sorry, guys, kind of off the cuff. But here's some of the other better numbers that I'm seeing them as I dig through it. There were 813,000 so-called discouraged workers in October, which is a lot. Yeah. But here's the good news. That is a decline of 154,000. And the labor force participation rate, the number of people in the market or looking for a job, actually ticked higher. Mm-hmm. So signs of confidence, people getting a little more encouraged about their ability to get a job, even if they don't have one. And that's been one of the sticking points that we have seen the last couple of months and really years.
Lee Gallagher?
That's really the most important number here, because, and this is why, in a way, this number is the best of both worlds, because you have this 170,000 is a huge number, because the estimates were as low as 105, as high as maybe 130. This is 171. That's a huge deal. Secondly, the number always is going to tick up a little bit as just what Brian said happens. People re-enter the workforce, but you don't want it to tick up too much, otherwise then people will start to freak out again. Okay. So it was a tick up of 1%, which is actually good and great. And so, I think it's really strong on both of those
counts. Is it too soon to ask one of you the impact of the hurricane on this? There's talk about it shaving off half a percentage point off the GDP, but can we kind of layer that into this yet? Or is it?
Well, it's certainly not going to be a factor economically in the election. The hurricane is a negative, and anyone who wants to try to spin it into some kind of positive economic thing because we're going to build a bunch of hurricane barriers is wrong. This is a loss of national wealth, a loss of things that are going to have to be paid for. And I think the economists think it's going to cost us a few tenths of a percentage point off of GDP in the coming months, but it's not going to be a factor in this election or a material factor in the election.
So, Brian, normally, as you said, we're starting to see initial positive reaction. Game out the rest of the day, you think markets will stay positive off of this news, or will they take a second look, as sometimes happens, and turn in a different direction?
You know, that is, I hate those kind of questions because they're impossible to answer. I mean, listen, the market is a forward discounting mechanism. In other words, it looks ahead. I think Stephen's points about what's this going to do over the next month, the hurricane as well. The market theoretically is supposed to be based on stock prices that are future corporate earnings. Right? That's all a stock price is what you're betting on earnings coming in at. So I think that what the hurricane may do, how retail sales are looking. But here's the thing, guys. The reality is this, is that we have seen, unless this just crushes confidence, we have seen upticks in retail sales. We have seen upticks in consumer confidence. Housing. We are now seeing more confidence in the job market. And when people are confident, they spend money. I don't know what's going to happen in the market today, but it's been a pretty good year so far, and people are more confident. And that is the American economy, is just confidence.
John Meacham.
What's y'all's view of the conventional wisdom that an Obama re-election keeps private sector money out of the economy, that people are still going to believe there's regulatory uncertainty and are not going to be investing? You talked about cost cutting.
I think either one getting elected keeps money on the sidelines until there's some resolution of the fiscal cliff and what our budget and tax policies are going to be, and some more clarity on regulatory stuff. Actually, probably more questions if Romney's president. I'm old. I'm very old. I'm old. More questions if Romney's president way about what the regulatory policy is. With Obama, we know what the regulatory policy is, but the big overhang is the fiscal cliff, and that exists no matter who's president, and it's going to be the thing that's going to dominate the news for the next 6 or 8 months.
I also think it depends on what industries we see grow. I mean, if you look at what's happening, one of the fascinating things about the unemployment numbers is that they are so hyper-regional. If you look what's happening in North Dakota, where there is a shale boom,
they have jobs
unemployment
there.
is 3%. It's 1% in certain places.
Yeah. Wow.
And then you look at places like Nevada, and it's close to 12%. California, it's like 10.8%. And even within California, I was just in Silicon Valley last week. They cannot find, the biggest problem is they cannot find engineers out there. That is the biggest problem. Then you go to Southern California, it's a different story.
So Brian Sullivan and Lee, you were pointing out the uncertainty that CEOs feel, yet there are companies that are doing well, and there's consumer confidence up. There's data that you just put on the table that shows these upticks, that shows people are feeling confident. How is this not in sync then? I mean, I understand that the administration might have caused some uncertainty for major companies, but at the same level, they are making profits, are they not? What am I missing here?
Well, the big thing that's happening. Oh, sorry.
Go ahead. No, okay, Brian, go ahead.
Well, ladies first.
All right, Lee Gallagher.
I'm sorry, Brian.
Nice. I like it. Lee, jump in.
It happens all the time on my own show. Don't worry about it.
And a lot of it is a productivity thing. In the past 3 years, these companies have been forced to see what they can get by with. And you've also had this technological improvement. So you've got retailers now using weather software to tell them, I mean, maybe this is a bad week to talk about this, but to tell them, when they should really staff up almost to the hour, so they don't have to plan, they can plan it, they need fewer people, basically. And so that's just one example. But the productivity has really had an impact.
Brian Sullivan?
My take is I don't know if it's better or worse or just whatever. This is that there's two economies right now, right? The unemployment rate for people that are over 25 that have a 4-year college degree, I'm looking at it right now, is just 3.8%. It went down from 4.1 to 3.8%. That's basically full employment. So we've got two economies in America right now. If you've got a 4-year college degree, the numbers say you can probably get a job. It may not be the job you want, but you're probably employed. The Fed has lowered rates, which means if you own a home, you refi, you have more money, right? The stock market is up because the Fed has basically thrown all this money into it. So if you've got money and you've got assets, unfortunately, you're probably getting wealthier because of the Fed. If you don't have a college degree, if you don't even have a high school degree, the unemployment rate is 12.2%. So what we're looking at here are people that are working are doing better because the Fed has basically made everybody wealthier and lowered our costs. If you don't have a job or don't have a high school diploma, it's very, very difficult. And I think that's the bifurcated economy. And I was in Silicon Valley last week as well, and I saw the same thing. Wow. And forget about engineers. They can't find anybody because nobody can afford to live close enough to Silicon Valley who's a service worker. You got to live 100 miles away to commute to your job working at a hotel.
Very good point. Mark,
so to look at the politics of this based on the prism of my Twitter feed, journalists are basically saying two things. One is mostly good news. If you're looking at it on the merits, mostly good news. Plenty of talking points for the president, but also some are saying no real change. David Gregory and others saying both sides have their talking points that are the same as before. The Republicans so far have one talking point off of this, which is the unemployment rate now in this report is higher than when the president took office. That's their main talking point, and that's not politically nothing, but they're not seizing on this the way they would have had we seen a less good report, and I think that means to me, on balance, better day for the president than he could have possibly expected or hoped for just a few months ago when things looked a lot worse.
Okay. All right. Wow. Brian Sullivan, thank you very much. It has been quite an action-packed week and a really tough week for millions of families along the East Coast. Ahead, our look back at the week of Hurricane Sandy. We'll be right back.